Hello, and welcome to our third session of Talking Point Tuesday. I am your realtor, Anjali Harvie with Keller Williams Experience, and this is Brad Trojan. Today, we're going to be talking about your credit score and everything around credit. Take it away, Brad.
Sure thing. So this is a topic that may not be the most popular, but it is very important to discuss. Your credit is huge when it comes to making a home purchase or even doing a mortgage renewal, doing a refinance. It's an important component of the process into completing a mortgage. So for most of you who may know or may not know, your credit score, it's calculated by 5 different components. It's like a formula that stirs together and creates your score. So it's based on 5 categories, including your payment history, the amounts you currently owe, your credit history length, new credit history, and the types of credit you have. So generally, a score of 720 and above is very good. 800 and above is excellent. A score of 650 to 719 is good. 600 to 649 is fair, and anything below 600 is considered poor. So with that being said, here we've got 5 tips for you on how to improve your credit score. So number 1, and it's probably the most common sense one, it's pay your bills on time. I can't stress it enough.
Number 1.
Pay all credit card balances on time. It is often the most important factor that affects your credit score. And that can be as simple as a cell phone. That could be simple as just a MasterCard, a Visa. If you're the type that may occasionally forget and say you have late payments, that usually impacts your score negatively. So the biggest tip I give to everybody is, we're in 2021. You can set this to be automatic. Contact your bank, contact your cell phone provider, for example, contact your internet and cable provider to make sure that just the money comes out of your account every month. That way you don't have to think about it. You don't worry about forgetting about it. And it's just, that you're going to be good moving forward with that. So I can't stress that enough. Our second point here is consolidate your debt. So that means that getting a low interest balance transfer credit card can save you very significant dollars in interest payments. So it means that if you just plan to pay all or most of your debt during low interest periods, it can often increase your score. So for example, you can use a personal loan to help pay off debt as well if you qualify at a reliable rate. So I know Anjali's got an example here to make it more simplistic.
Well, last year I had owned my home for 5 years, and it was time to refinance. And I decided to pull out some equity on my home and consolidate all of my debt. I had some really high interest credit cards and things like that, and it helped me so much just get ahead and capitalize on the low interest rates. So very helpful for me, and definitely something, if you want to consolidate your debt, you should definitely talk to Brad about how to do that.
Oh, definitely. So point number 3 here, this may sound a little wacky, but it works, is having multiple avenues of credit. If you have multiple credit cards, I know one may generally think, oh my gosh, this person's crazy. They've got 6, 7, 8, 9 different plus credit cards. But believe it or not, even if you got a few and you use them and you pay them off accordingly, it actually demonstrates to credit bureaus that you are a reliable borrower if you manage these different outlets very well. And generally, for most applications, you need at least 2 active cards on the run. So again, it just to prove to bureaus that, hey, Mr. and Mrs. Smith, they manage their credit very well. Boom, we're going to give them a higher score. And with that, you can get a better rate. And it also wants to be noted that you're having multiple types of credit cards. It often accumulates around 10 to 12% of your total credit score. So moving on to point number 4, it's maintaining a low balance. So this one's got a little bit of math involved. So meaning that, for example, if you have a credit limit of $1,000 a month you can spend, and let's say you're spending $900 of that per month, it can often negatively affect your score. Maybe not too much, but it does a little bit. So what you got to do is, even though you're paying your bills on time, ask for a credit limit increase. So let's say you're spending $900 a month on a $1,000 limit. If you increase that limit to $1,500, but you still only spend $900 per month, it increases what is called your credit utilization ratio. So it shows that you're using a percentage less of the allowed money you are to spend on that card. So again, bureaus look at that and see, oh my gosh, this client is not always maxing out or getting close to maxing out the card each month. So believe it or not, that's actually something that can really improve your score.
That's so interesting.
And lastly here, it's want to mention, it's keep old credit alive. Keep all your old cards alive. I'll let Anjali touch on that one.
Yeah. Well, sometimes something that I had before I consolidated my debt, I had a little too many credit cards, but I ended up holding on to a few of them, and one of them using just for gas, another one maybe just for groceries. It can be really helpful because, as Brad said, having those different streams of credit is really important. So although, if you're spread out too thin, then sometimes they can be harder to manage. So if you have, an old credit card and you just use it for your gas or your Timmy's and then pay it off, it can actually be really helpful rather than canceling and getting rid of those old credit cards.
Perfect. So that pretty much wraps it up. If you've got any more questions for us regarding your credit, you can find myself or Anjali. We're everywhere. You can find us on Facebook, LinkedIn, Instagram. All of our contact info is there as well. And next week we'll be going into episode 4, and we'll be covering.
Yeah, next week we're going to be covering real estate decision making. We're going to be talking about all different things regarding different decisions, buying, selling, investing, and different questions you can ask. So we're really excited to talk about that one, and hope you'll join us next week. Thanks for tuning in today, and reach out if you have any questions at all. Have a great day.
See you next time.
Bye.